Thank you, Mark. Hey, it's really great to be here. You guys got me on this? We're good? All right, we're good. Hey, everybody, how are you? Good. It's great to be here with this group. You know, all of my origination career was done as a broker. So I completely understand what's the things that we go through. And I know what Chassie was talking about. You know, I've been doing this a very long time. I can't believe I'm going to say this. I'm in this industry 33 years, okay? Woo! Man, where does the time go? It's like when I was a kid, it felt like a day was like a week. Today, it's like a week seems like a day, doesn't it? You just like flip the calendars. Every month, it seems like it comes faster and faster and faster. And I've got to tell you, in my 33 years in this business, much of it originating, over 20 years originating, that I've never been more concerned about the future of the originator than right now. Right now, you are under attack, and you're under attack by fintech companies who are trying to take your job. They're also trying to take realtors' jobs away. And that's important to us because what happens is that we depend on a lot of them for referrals. So if they get kind of decimated and their ranks thin, then what happens to us is that we really have to focus on where we're going to get referral sources from. So what we need to do, this entire game, what we're going to talk about today, is we're going to talk about how do we make a lot more money by doing more conversions from conversation to application. I will tell you what the statistics are. When you talk to 10 people on the phone, one of them turns into an application. Do your numbers. That's normal. Now, some people are really good and they do a little bit more than that. But what I need from you is to do 7, 8, or 9 out of 10 people that you talk to, you turn them into mortgage applications. And the only way we're going to do that is by being an advisor. Now, I know if I ask this entire room, heck, if I asked 10,000 people in our industry, mortgage brokers, mortgage bankers, realtors, whomever it is, are you an advisor or are you a salesperson? Everybody's going to say, oh, I'm an advisor. Bullshit, okay? You've got to be an advisor, and you can't give what you don't have. So it is no longer acceptable to just know how to fill out a mortgage app. No longer acceptable. It is no longer acceptable to be mediocre. Now, one person in this room, when they were kids, said, well, when I grow up, I really just want to be mediocre. You know, you want to be exceptional. Heck, you are exceptional. So we're going to work on today is how do we make that shine? How do we bring that out? And how do we let the customer know? Because the customer will know in the first 10 minutes. That's how fast your brain works. I do a lot of brain study. In the first 10 minutes, they'll know if they want to do business with you or not. And the main way they do it is by trust. You build trust 2 ways. One is by knowledge. We're going to focus on that today. The other is you tell them everything bad. I know that sounds weird, but I want you to look at your customer from now on as if they were a kid, your parent, your best friend, going to another mortgage company. You can't do the deal, and you're telling them what to watch out for. You want to start making huge conversions? Build trust. This game, any relationship, trust is key. It is all about trust. You get them to trust you by telling them everything bad about the transaction. You make them know that what's best for them, their best interest, comes before your commissions, and then watch your income skyrocket. The other way is through education. And let's face it, math comes into play. So what I need you to do is I need you to be good on your feet, good with math, and good with your math skills. So what we're going to focus on now is we're going to focus on a few math skills together, and I want to first test you on yours. So here we go. I'm going to ask you a couple of very simple questions, but here's what I need you to do. I need you to look at the screen, and I want you to pay attention. Okay, so you guys ready for this? Yeah. All right, so 2 people are ready. I was hoping for like a little more participation. Are we ready? All right, good. Let's get a little energy going. So here we go. You're driving the bus, and there's 6 passengers on the bus. You can see them on the right. 1, 2, 3, 4, 5, 6 passengers. So now, next stop. 2 get on, 5 get off. No cheating, no phones, no paper. Next, 3 get on, 4 get off. Got to do this in your head. Next, 4 get on, 3 get off. Next, 1 gets on, 2 get off, and I've got some questions for you. First question. How many stops did the bus make? Call them out. There's a safe environment. Call them out. Okay, isn't that crazy? Okay, isn't that crazy? The answer? 4. Next question. How many people left on the bus? 2 people. Correct answer. Last question I got for you. Here we go. How old should the bus driver be? How old? 56. And I know that you know the answer, don't you? That's right, that's right. So we've got at least one person that knows the answer. Who knows the answer? 47. You know the answer. So please tell everybody nice and loud, why should the bus driver be 47?
Because I'm the bus driver.
Because the first thing I said to you is, oops, let's go back, hold on. First thing I said to you is, you're driving the bus. Now, here's the thing, team. This is the way it works with our customers. We don't frickin' pay attention. We're so busy selling that what we want to do is we want to talk about our agenda, and we forget about what their why is. We forget about what's important to them. Heck, we don't even listen to them. All we're doing is trying to sell them, and we've got to stop doing that. And if you really want to build a relationship, you've got to listen to that client. What you want to know is you want to know what it is that's important to them, and you have to ask it in different ways, because the first time they'll talk to you, they'll tell you what they think you want to hear. And then after that, you start to dig deeper and you find out what they really need. That's when you can use your expertise to understand what it is that they need. When you do that, that's when the transition occurs. You see, if you just successfully give them what they asked for, all you did really is not screw up. That's the highlight of what you did, just didn't screw up. But if you take what they thought they wanted and convert that into life-changing events, that's when you really build the experience for the customer. We're going to talk about that today. First thing we have to understand is we have to understand the market. Now, do not roll your eyes. Don't you dare. Don't roll your eyes when we start talking about this stuff, because it is important. Look, you have to do the stuff that an app on your phone can't do, because you can't compete with the app on your phone. Let's face it, it is faster, it is definitely more accurate, and it's definitely cheaper. So if we're going to try and fight against an app on the phone, it's hard to win. We have to do the things that they can't do. And the good news is that this is all learnable. It's easy to learn on top of it. So I want you to focus. I want you to draw on your capability. Shit, man, if you could do a mortgage app, this is easy. You know how hard the mortgage is compared to doing this stuff? Nobody came out of the womb, was slapped on the rear end, and said, oh yeah, I know that on an FHA loan, the front ratio is, nobody did that. You learned all this stuff. And what you're about to go through here is even easier. So are you ready? Yes. I want you to just challenge yourself here, because you have to. You have to be the best you can be. And when we talk about this here, we've got something called an inverted yield curve going on. Have you all heard inverted yield curve? Yeah. Do you need to know a little bit more about what this means so you can explain it? Yeah. Okay, so here we go. You go to the bank, and when you go to the bank, you have CD options to put your money away. So there's a 3-month CD. Whoops. There's a 3-month CD. There's a 1 year, a 2 year, a 5 year, a 10 year. And when you look at these options, you say, well, if I put my money away for 3 months, I would expect to get this much. But if I'm going to commit to putting my money away for 10 years, what do you think that the bank should give you? A what? They should give you more, a higher rate. Yes? Yes. Okay. So when the bank says, well, if you put your money away for 3 months, you get this, and if you put it away for 10 years, you get this. In fact, if you're in Germany or Denmark and you want to do that, the bank's going to charge you for the more you want to put your money away. Charge you. Like putting your furniture in storage. Here's my money. Okay, we're going to charge you for that if you're going to put it away for a long time. Shorter term, it's free. Why is that? Is that unusual? Yes, of course it is. It's unnatural, which is why it's something to talk about. So let's understand why it happens first, and the important message that it means. Because the message affects you and your family's personal wealth, number one. And number two, it affects the advice that you have to give to your customers. So you have to be the expert. And it's easy if we understand the secret. Here we go. The 10-year Treasury, longer-term instruments. If you were doing longer-term instruments, like a mortgage, and you're in the business of loaning your own money and sending out money for people to do their mortgage, and they're giving you a fixed payment, like a mortgage payment, every month. You take that payment, and let's say it's $1,000. This month you buy a list of stuff for the $1,000. Next month you buy everything on the list. The next month you buy everything on the list. But after about a year or 2 years or 3 years, what do you notice? Can you buy all the same stuff on the list? No. Can you? No. Why? You all know the answer. Because of what? So you all know this stuff. We just got to piece it together. Inflation causes prices to increase, doesn't it? Which means if prices go up, You can't buy all the same stuff as you could with that same fixed payment like a recipient of a mortgage payment of that $1,000 a month. Does this make sense to you? Okay, good. So now, if you're in the business of doing mortgages, you don't have any control over inflation. In fact, you don't have any control over the loans that you already did because they're done and those people have a closed loan and they're making payments to you. But before you do your next loan, if inflation were rising, or if inflation were about to rise, and you thought it were, what's the only way you could protect yourself? Say it loud. Higher rate. Come on, why does not every one of you say this? How else would you protect yourself? You have to start at a higher perch because now the erosion of inflation is going to be more damaging. So if you're here, it's going to really eat away at what you have. In fact, 17 years from now, it would take $2,000 to buy what $1,000 buys today. So if inflation were higher, that might happen in 12 years. So how do you defend or protect yourself? You got to start higher. You charge a higher rate. Now instead of $1,100 a month, maybe instead of $1,000 a month, maybe it's $1,100 or $1,200 a month, so that you defend yourself against the inflation. Do you understand that? It's important you do, because if you do, you're in the 1% of people in the mortgage business that understands what causes interest rates to rise and fall. Everybody else overcomplicates it. It's one thing, and it's inflation. As inflation rises, what do interest rates have to do, everybody? If inflation falls, if it's low, like it is now, what do interest rates do? They come down. Be confident in this, team. The best way to learn is by teaching. Don't worry. Don't be like, nobody's going to spank you if you get the answer wrong, okay? It's okay. We're amongst friends here, and this is good. This is good for you to challenge yourself. So now, what type of an economy do you think it is when there's low inflation? Let's understand the definition. Textbook definition of inflation. Too many dollars chasing too few products. So, if everybody here wanted to buy something and they're waiting online to buy it, and this gentleman here is the only person who's selling it, you think he's going to put it on sale? He sees all these people that want it. What might he want to do? Raise the price. That's inflation. Inflation is a result of what type of an environment? Economy that is what? Strong, right? Strong, because everybody wants it. You got it. It's okay. That's strong. Everybody's strong. But what if everybody on this table is looking to sell something, like a bunch of people in a housing development, and everybody's got a for sale sign on that block? What tends to happen to those homes? Goes down. Exactly right. So what type of an environment is that? Strong or weak? So deflation is evident of what type of environment, everybody? Weak. Inflation suggests that the environment economically is what? Bingo. So because interest rates are low today, what is that telling you about the economy potentially? That there's no pricing power. That maybe the economy might be a little bit what? Soft, weaker, yes? Okay, so the 10-year says the economy's soft. Now, what about that 3-month treasury, the 1-year, the 2-year? Is those instruments, if you were loaning your money out for 3 months, are you really concerned about inflation that much? No, because you're going to get paid back in 3 months. It's very different than waiting 30 years to get paid back. 3 months from now, inflation is not going to eat away that much, even if it were to rise. So they don't care as much about inflation. What do they care about? Competing forces. What's the number one competing force out there? Number one on short term, it's the Fed. How long is the Fed rate? Is it 10 years? Is it 5 years? Is it 1 year? Is it 1 month? How long is it? 1 day. You should know this. They could change it day to day. It is literally called the overnight lending rate. So now that you know the Fed's very, very short term, so if it's 1.9, maybe the end of this month they bring it down to 1.6, what will happen is those shorter term rates have to compete with that, so that's going to boost up short term rates. So what is the message? The message is the economy might be softer than you think, but the Fed's too high and not responding. And that's why you get these unusual circumstances. And even if the Fed were to cut, it would still take about 6 to 9 months to filter through the system, which is why in the extreme circumstances, when the yield curve gets inverted, as you can see on the chart, it's always followed by a recession. Always. Okay, recession. Big deal. Recession. How does that affect you? In a big way. Now, we talked about this. Let me give you a better indicator of recession. Better than this, which is 100% accurate, but even better, is this one. the unemployment rate. Now, if you were to say, hey, when would we get a recession? When unemployment rate is high or low? What do you think most people would say? When it's high. In fact, you hear people today say, how can we get a recession? Unemployment is so low, it's 3.5%. That's every time a recession happens. It's when the unemployment rate reaches its lowest level and starts to tick higher. Take a look at the chart right here. You see, unemployment rate hits its lowest level, starts to tick up, recession. Again, 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 again. 100% accuracy every single time. Now, you don't have to be a nuclear physicist. Look at where we are today, okay? Or you think we're near the top of the range today or near the bottom of the range? Where do you think? You betcha. So that means that there is a recession. It's going to happen. We're a cyclical economy. It's just when, not if. So what do we look for? The key is when it starts to turn higher, you'll probably see a recession in 6 months. So let's understand why first and then what it means to you. Why? So, okay, you're in a business. Everything's great. You're so busy that you can't handle it all yourself. Your staff can't handle it. What is the next thing you have to do, everybody? Hire. So what do you think that does to the unemployment rate? Brings it down because people start working. Now, things invariably slow down a little bit for you, right? So they slow down a little bit, and then what happens? You say, I see people like, they're on Facebook all the time, or playing solitaire, whatever it is. And now what are you probably going to do? Let them go, unfortunately. Such a nasty task to do, but you let them go. What would that do to the rate of unemployment? Makes it go higher, but now take another step down the chessboard. Let's be smarter. Those people, unfortunately, that are no longer working, they're going out for fancy dinners, they're going out on vacations, buying a lot of furnishings and stuff like that. They spending a lot of money now? They just lost their job. Are they spending a lot of money now? No. So how about the businesses that depended on them for their business? Those restaurants, those clothing stores that are no longer seeing those patrons. What happens to those businesses? They slow down, and what do they have to do? That's why the unemployment rate shoots up so rapidly. Look at what happens every single time. During the gray area, which is a recession, look how fast the unemployment rate shoots and skyrockets up. So now what we've learned. What we've learned is that we watch the warning signs. When does it tick up? Unemployment rate today is 3.5%. So that means if it goes to 3.6, we hit the alarm bell? No. We're patient. If it gets to about 4%, you're going to see a recession in the next 6 months, guaranteed. Now, what does that mean to you? The stock market declines between 36 and 51% during recessions. You have your money in the stock market? Some of you? You have mutual funds, you have IRAs, you have 401ks, you put your money in the stock market, you want to lose 50% of it? No. Anybody lost money during the dot-com bubble or during the Great Recession? Anybody got hit pretty good? We don't want to do that again, do we? We want to protect yourself, protect your family. So what you do is when you see this, I want you to start being defensive. I want you to protect your assets so that you don't get wiped out, personally. Now, there's a guy by the name of Samuel Benner. Okay, Samuel Benner's a really interesting guy. He says human beings, we are cyclical. And we really are. If you think about cyclical, we tend to do the same things over time, and he illustrated that. In fact, how about the lunar cycle? Do people react crazy on a lunar cycle sometimes when it's a full moon? What happens to emergency rooms and police stations during a full moon? What happens? What is the old saying? There must be a what out. You gotcha. And people do respond that way. In fact, let me tell you something. You could fact check this. In fact, you could fact check every single thing I will tell you. But did you know that if you bought a stock on a new moon and sold it on a full moon, your chances of a profit are 430% better than if you bought it randomly? Look it up. 430% if you bought on a new moon and sold on a full moon. It's a fact. Talk about cycles. It's been said to me, is there anything more powerful than the menstrual cycle? I mean, I don't know. So when we take a look at Samuel Benner, what did he come up with? In 1875, this guy says we're cyclical. I could see cycles happening. And because of that, 54 years before it happened, he forecasted the stock market crash in 1929 correctly. 98 years before it happened, he forecasted the crash in 1973. He did this in 1875 because he said we're cyclical. How about this one? 125 years before it happened, he said the dot-com bubble. And then he correctly, almost correctly, forecasted the Great Recession. This happened in 2009. The guy said 2010. I mean, he did it 135 years in advance. Give him a break for a year, okay? So he is saying also, he said 2018 was a stock market peak. Now we know that 2019 stocks went higher than they did in 2018. But if he's right, it would coincide perfectly with the recession happening next year, which you know, all of you know I've been calling for a long time, saying 2020 looks like a recession year. So if we do get a recession, we protect ourselves. But more importantly, near and dear to our hearts, what happens to interest rates during recessions? Let's take a look. Here's mortgage rates. During the last recession, 13 months of the recession, interest rates from 6 to 4.875. Could you do a lot of refinances in that environment? And by the way, please cut the crap about a 98% purchase, for goodness sakes. When people tell me that, you know what I say? You're missing 58% of the business because it's 60% refi right now. You have to do refinances. You have to because, A, you owe it to yourself, you owe it to your family, make as much money as you can. And two, it's the right thing to do. When you sat across the table from that customer, you said, I'm going to take care of you. Then you said something I really, really hate. I want to be your lender for life. I mean, geez, please, that sounds like, that's like herpes or something. I don't know. It's just so. Please stop with that, okay? So if you really care about that customer, which is really what's important here, and you really want to make sure you make a difference in their life, then now's the time to be servicing them. Black Knight came up with a statistic, 11 million households could benefit by a rate of 0.75% right now, today, even with rates moving up a little bit from where they are today, okay? Right now, they could benefit. It's up to you to help them. Look at the other recessions. 7 3/8 to 6 3/4. Heck, could you do some refinances there in that 6-month period? How about this one? 11 to 8.75. How about this? 18 to 13. Now, I know 13 doesn't sound so good, man, but if you're paying 18, 13 sounds like a really sexy refi, doesn't it? So this one went 16 to 11 3/4. So what have we learned so far? We have learned that is a recession more than likely coming, and we know the signs to tell us when. Yes? And during recessions, what happens, everybody? What happens to interest rates on mortgages? In our line of work, what happens? That's right. So what advice are you giving your customers today? How are you great today? How do you become an advisor today? When you sit down with them, when some guy or gal is saying, ooh, I could save you a whole bunch of money. Let's do this. Upfront MI. Good idea or bad idea? Bad. Why is it bad? Because it takes 4 years to recapture the amount that you have to lay out upfront on upfront MI, and they're touting, oh, I'm going to save you $150 a month. What good is that if you only have 10 or 12 months worth of savings, and then you refinanced, you lost about $5,000 or $6,000. This is how you kill your competition. Advice beats price every single time. Let somebody be an eighth cheaper. I don't care. That $20 a month, I made up 6,000 of it, okay, and more. You're never gonna make up what I'm gonna save you. Strategy is what's important. I'm not one of those speakers who never wrote a loan and tells you, oh, rate's not important. Yeah, right, because you never wrote a loan, right? I never had a customer say to me, oh, that box where it says interest rate, fill in whatever you want, doesn't matter. Never had that. Yes, rate's important, but strategy is more important. And you have to emphasize strategy, but you can't give what you don't have. You need to be an advisor. You need to understand this stuff. Because when you do understand it and you explain it, all the difference in the world. Conversion from conversation to application. This client just spoke to 2 people. They just spoke to somebody who said, yeah, market's pretty good. And then they spoke to me, and I gave them this 8-minute talk. Do I have a better chance of getting that deal? Do you now have a better chance of getting that deal, more importantly? Absolutely. That's why you have to get this, practice it, rehearse it, understand it, and speak the words not because you're memorizing it, but because they're in your heart. And that's where you can make a difference for people. You see, because if somebody says, I want to pay a bunch of points and get a lower rate, no, you're never going to be there to 5 years to recover it. When somebody says to you, oh, well, you know what, I want to refinance, right, and I've got a whole bunch of closing costs, because I'm getting this lower rate. You say, don't go for the lower rate, take a higher rate, still save you money, but now no closing costs because chances are in a year from now we're going to be doing this refinance again. I don't want you to have to wait 5 years to recover your investment. Does that make sense? Yeah. You betcha. So now, because we can give advice, we win. All right, so the media, who is completely clueless, as soon as this comes out where there's going to be a recession, what is the media going to say about the housing market, everybody? Diana Olick, housing's going to be terrible. She's been saying it for 7 years, right? So now, when that happens, we show this to our customer. We show this to our realtor. And we say, listen, let's go with the facts. Case-Shiller is the gold standard for appreciation. Look at the blue line. The first recession to your left. Whoops, hit the wrong button. Sorry. First recession to your left, right here. During the recession, home prices went up a little bit, then went up a lot later. Here, went up a lot during the recession and a lot more. Here, went up and up a lot more. Here, went up a good amount and then really went up. Here, they went up a whole lot and then they went crazy. Now, this is where people get confused. So we see during recessions, home prices going up, not down, and then a lot more after the recession. And then somebody will say, well, yeah, but then the recession caused the housing bubble. No, it did not. The housing bubble caused the recession. Why? Well, because during the housing bubble, we were going nuts. I mean, think about the loans that were out there. No income, no asset, no job, non-owner occupied, 580 FICO score. What could go wrong with these loans, right? I mean, geez, surprised that they didn't do good. So look at the last recession, Great Recession. What happened? Great Recession, home prices tried to go up. But then all the short sales, all the foreclosures, weighed it down a little bit more, but then notice what's happened for the last 7+ years. Up, 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 and it's going to keep going up. Anywhere you are, go a little above median home price and lower, market's on fire. Good luck trying to find a house right now, yeah? That's right. The further up you go from median home price, the softer the market is, okay? So that's where the market is. It's really like two housing markets. Now, big question. Put your thinking cap on. Test. You tell me, why does housing do so well during recessions? Why? Because what happens? Say it loud and proud. Rates go down, and that's why housing improves. Now, let's break this down. Let's do the number. I love math because math just doesn't lie. So if we see unemployment rate go up during a recession, which it does, there's 161 million people in our labor force. If unemployment went from currently 3.5% up to 6%, you would now have 2 million households. Last thing in the world they want to do is buy a home. Agreed. But because rates will drop by about 0.5 to 5/8 to maybe 0.75%, even than where they are now, yes, that's true, you get 4.5 million people that can enter the housing market that didn't do so before. The numbers overwhelm it. That's what happens every time. That's what will happen the next time. And that's why housing will do well even in the next recession. You need to give this lesson to your customers and to your realtors. This is critical. Now, how about the Fed? The Fed gets it wrong because they got beer goggles on all the time, okay? They really do. Worse than the people in Vegas, I'm telling you. So now, the Fed, which, by the way, the Fed's really important. You've got 12 people that vote on the most important price and commodity in the world. What's that, everybody? Most important price and commodity in the world. The price of money. The price of the cost of money. You've got 12 people. There's over 7 billion of us, but these 12 do it. But here's the kicker. These 12, they never even ran as much as a lemonade stand or a newspaper route. And they're controlling the most important price in the world. Just 12 of them who don't really know what they're doing. Which is why you have all these boom and bust cycles. So let's take a look, and now there's a lot of things I could point to where the Fed's messed up, but this one really is glaring. A year before each recession, the Fed is asked, it's always asked the Fed, what do you think the chances are of a recession in the next year? So they're always asked this. So if we look at where the recessions were, let's go back to this, let's go back to this recession here. And a year in advance of this recession, the Fed was asked, what are the chances of a recession? Well, we know the right answer was 100% because there was a recession. But they said, 15% maybe. Oh, boy. Okay, you got that one wrong. Fine. How about the dot-com bubble? Alan Greenspan yelling irrational exuberance, right? All the dot-com companies blowing up. A year before the recession. What's the chances of a recession? 15%. How about the Great Recession? That one they had to get right? I mean, come on. The collapse of the housing market, the Great Recession, all of the things that we saw happen that went bad. 25% maybe? As bad as this is, you know what's really worse? You know what's really pitiful? Now, when you get into a recession, you don't know you're in a recession. Anybody know why? Because here's the technical definition of recession. The definition of recession is 2 consecutive quarters where GDP, gross domestic product, is negative, right? So in order to find that out, you have to kind of go through the quarter, then go through the next quarter, and then you look back and some economist goes, oh yeah, you know, back in October we were in a recession, right? 9 months ago. So that's where you can be in a recession and not know it yet until like 8 months or 9 months later. Here's the real crazy thing. The Fed, during this recession, they're in it, and they said, 30% chance. Here, dot-com bubble, 40-ish% chance. The Great Recession, they're in the middle of it, maybe a 40% chance. They get it wrong. And right now, they're asked, a year in advance, what do you think the chances of recession? They say 33%. This is screaming to you that there's going to be a recession. Screaming. It is the highest level in 11 years. It is screaming recession. And why do they get it wrong? Because they have beer goggles. They don't understand it. Now, if you don't think rates could go down, please think again. Here's about where rates are within a few basis points. It changes all the time. Of course, it changes while we're talking today. But look at where we are in the United States. We're much higher than everywhere else in the world. There's $17 trillion of negative interest rates in the world right now. And what we see is during the next recession, I see the 10-year Treasury. Right now, today, it was about 175-ish. It'll break the all-time low of 137. And I think that we see it challenge around 1%. Don't see it going negative. So if we see 0.75% drop here, mortgage rates, half, 5/8, 0.75% drop in mortgage rates, can you do a little more refinancing that? So you should be talking to your customers this way. Now, how about the guy who says, ooh, I want to wait for the lower rate? No, because listen, as good as we have been in the past, and we've been good, there is no guarantee because things can change. So what you want to do is strategy. Let's do the refinance today. Let's save you money today, but let's do it with as little closing cost or no closing cost because that's the magic that we do. Once you do that, if the rate goes low, we do it again. You don't have to recover any investment. You didn't make it. And if rates happen to go up, well, you still saved a boatload of money and you were ahead of the game for 5 years. That's the time it would have taken to recover your closing costs. It's a win-win-win. This is what an advisor does. And that's what you are. That's what you are. I want to share something with you. Now, a lot of you know I've made some pretty good calls that were crazy, and people didn't believe me. A few years back, I was on CNBC. You could look at the video. They laughed at me because the 10-year Treasury was at 3%, and I said, I see it going to 1.39. I said, well, that's like some crazy number. They laughed at me. It was such a crazy, crazy number, so outlandish. And everybody laughed at me. Well, it didn't go to 1.39. Sorry, it went to 1.37, so it was pretty close. Now, you all know probably by now, because it's been everywhere, that in the month of May, with the 10-year Treasury at 2.53%, it was videotaped, it's all over, you could find it easily. I said it's going to 1.37. It's going to hit that low number. Now, that was being a 116 basis point drop from where it was. It didn't quite get there. It got 111 of the 116 basis points, but nobody saw it at the time. I still think we get lower than that. And I want to share with you really one of the big reasons why. I want you to look at the historical cycles. And the way you do this is you look at a trend, and you look at the cycle of the 10-year, and the first 2 points that are circled on the left show you the low and the high in the cycle. Now, back in the 80s, that was 10% to 16% on the 10-year. Pretty crazy numbers, right? But the next cycle low and high, lower than the previous low, lower than the previous high. So let's look at the next cycle low and high. That's here. Notice the low, lower than the previous. The high, lower than the previous. Okay, let's look at the next cycle. Right here. Low, lower than the previous. High, lower than the previous. Let's look at the next cycle. And what do we discover? The low is lower than the previous. The high is lower than the previous high. Here, the low, lower than the previous low. The high, lower than the previous high. Here was my 1.37, the low, lower than the previous low, and the high, which was about 10, 11 months ago, lower than the previous high. Ladies and gentlemen, the next low that you're going to see is going to be lower than the previous low of 1.37. I think the 10-year gets to about 1%. And that's going to mean a lot of business for you. I don't think they go to zero. I don't think they go negative. Nobody knows for sure. I certainly don't know for sure. But I believe that we get to about a 1% 10-year Treasury, probably next year, probably when the recession hits. It's not, you probably, many of you are MBS Highway subscribers, you've heard me say this a million times. It doesn't happen in a straight line. And those of you know that sometimes we're going to be telling you that rates are going to go up, right? What was it last week and this week? We've been saying lock, lock, lock because we did not like where the market was. And sure enough, you protected your clients and you avoided this little hiccup we've had. Now watch about 1.78, 1.79 on the 10-year Treasury right now, because that should be a ceiling. If that holds, we'll get a little bit of a cycle back and we'll recover. If it breaks above that, there's going to be rockier times. You'll see the 10-year Treasury go towards 2%. So you, act accordingly. Refinances. I want you to do them. They're very important, but you need to explain them. I've got a question for the group. I'm a customer, and I don't know. And I'm going to ask you this. Okay, mortgage broker, you told me you're going to save me $300 a month, and you said my closing costs are $3,000. How long would it take me to break even? Who can answer? Everybody, can you answer this question, yes or no? My closing costs are $3,000. I save $300 a month. How long will it take me to break even? Everybody. Would you bet on that? We're in Vegas. Would you bet on it? You'd lose, because that's the wrong answer. Because payment does not equal cost. Payment is what? It is interest and, is principal a cost? No. You see, it's different. It actually takes longer than 10 months to recover when you compare it to cost. Now, I know that you might say, well, that's not a great selling feature that it takes maybe 12 months to break even, but it's honest, and it's correct, and it beats the shit out of your competition who doesn't know that. So you knew something special right now, and you have a way to beat your competitor. You have a way to beat that fintech company who's got somebody behind a desk that's quoting this stuff. You give insights as an advisor. You teach people something they don't know. Because look, here's the other one. Okay, great, you're going to save me 1.5% of my rate, but you're taking me from a 30-year to a 15-year, but my payment actually goes up $150 a month. I got $3,000 in closing costs. When's my break even? You can't calculate it, can you? Unless you do it by cost, which is one of the things we make it incredibly available to you easily, an MBS Highway. We look at things differently. We look at it the way an advisor should. And we look at it in a way that lets you beat your competition and show your customers something they don't know so they trust you. And that's the big question today. Are you a salesperson or advisor? As I said, everybody thinks they're an advisor. So do travel agents. There used to be these on every corner, replaced by an app. Can I tell you something? Travel agents would say, oh, nobody will ever replace us. The most personal things is travel, right? They need somebody. And don't believe your own crap. Because here's what happens. If I hear people in the mortgage business today say this, oh, nobody will ever replace us. They need somebody to hold their hand. Not everybody. Otherwise, fintech would never do a loan, would they? Don't whistle past the graveyard. Be smart. You know what the best CEOs, you know what the most successful people do? They are never comfortable. They're always looking at their business and saying, where's the holes? If I were my competitor, where would I attack? How could I win? You want to protect your, you want to be truly great? You spend time every day thinking about this and plugging those holes and pushing yourself to get better. You will never lose. Yeah. That's right, brother. That's right. So, why are we so concerned about this? Because of this guy. This guy, Richard Barton's a genius, and he's powerful. And he wants to eliminate your job. He said so. He said he wants to eliminate realtors. He said he wants to eliminate you. Why should we pay attention? Where did he work? Where was the CEO before he was the CEO of Zillow? Where? Expedia. He did it to them. He wants to do it to you, and he believes he can, even worse. Now, change. Change might take longer than you thought to occur, but when it happens faster than you ever could have imagined. Case in point, this guy. Well, not this guy yet. Here. Stockbrokers. Stockbrokers used to be everywhere. Now, what's this business about? It's not even E-Trade at $5 or $10 a trade. How much is it now to trade? Free. How are you going to feed your family on free commissions? How are you going to do it? How are you going to do it? But yet, there are stockbrokers who make a boatload of money who are no longer called stockbrokers, they're called asset managers. And that's what you need to be. You need to be an asset manager, okay? Debt. Let's talk about debt. I'm sorry, did I say asset manager? What I meant to say was debt manager. Forgive me. I meant to say debt manager. You can control debt of a customer. And debt's a really powerful tool. Let's look at Apple. Apple's got how much? $285 billion in cash? You could buy countries, plural. They don't even know what to do with the money they have. But they still have $122 billion in debt. Why? Why don't you just pay off the debt? Why? Because debt's very powerful. You can create wealth with debt, and they understand it. And so does every publicly traded or large company out there. They understand that no matter how much cash they have, debt can be leveraged to make more money. And you need to understand that too, because you're the only one that could do this for your customer. Let me give you a case in point. I want to make a promise to you here, okay? What I want to do is I want to change your life at this event. I want to do something for you that will change your family's life. But you got to help me. You got to help me. You have to make a commitment to me. It's not a big commitment. It's a small commitment. And that small commitment is you have to promise me this. If I gave you a promise that said, I promise you if you do this for a half an hour a day, that you will make an extra minimum of $100,000 a year, more than what you're making now, in exchange for doing something for a half an hour a day, would you make a commitment to do it? Yes or no? You're tentative about this? Yes or no? Yes. Okay. So it's worth it. $100,000 a year, guaranteed more for half an hour a day. And all I want you to do in that half an hour is talk to two previous customers. You've been through a couple of marriages. It gets in your vocabulary. The two previous customers. Two previous customers, right? So two previous customers. If you don't have previous customers, do you know people with mortgages? You have a Facebook friend group of 3,000 people, LinkedIn or whatever. Those people have mortgages. You just have to talk to two a day. Now, talking means talking. No email, text message, voice message, conversation. I know for the millennials, it's brutal. But you have to actually talk to people, two of them, two previous customers or people with mortgages a day, 15 minutes apiece, half an hour a day. If I promise you, and you guys know me for a long time, you know I do not bullshit, okay? If I promise you, it's going to happen. Are you going to do this, yes or no? Yeah. Okay, good. So here's what I want you to do. I want you to not cherry pick. I want you to just go in any kind of system, alphabetical, date, whatever it is, but do not cherry pick. So you say, okay, Barry, you're on. I'm going to do it. And tomorrow morning, or Monday morning rather, you get in the office and you say, okay, I'm going to do it. And you look at the first transaction by alphabetical or whatever it is, or by date of closing, and you pull up that file and you look at it and you see the rate that they currently have is 3.5%. You say, oh, shit. Frickin' Barry, 3.5%. It gets worse. It gets worse because, wait a second, $500,000 is what they bought their home for 3 years ago. They put down 20%, which means no MI. So I can't even save this poor guy any money on MI. So now their home, through normal appreciation, has gone up to $615,000, and their remaining principal balance through normal amortization went from $400 to $377.5. So now you look at your current rate, and your current rate is this. Not what you have right now. It's 5%. And you're like, Barry, how in the world am I going to take somebody 3.5%, no MI, and put them into a 5% loan? It doesn't make sense, Barry, because their payment's going to go up, and it's going to cost them $250 a month, and I got to charge them $3,000 in closing costs for the privilege. That's crazy. But you made a what? You made a what to me? To yourself. A commitment. That's a big word. You made a commitment that you're going to do this. So you do it. Let's see how it works out. Call a customer up. Hey, Barry, how are you? Great, man. Long time no talk. Yeah, what's going on? Hey, listen, I think we could do something for you that could create some real wealth for you. And that almost could be life-changing. Barry, that's great. I know the rates are going down. I heard the Fed's cutting. So I got 3.5%. I know it's 3.5% because I brag about it to everybody. When I go to a party, I tell them I've got 3.5% because I got the lowest rate out there. So I really love my 3.5% rate. So what do you got for me? 2.5? What do you got? No, actually, rates are not as low as 3.5% like you have. So Barry, what are you going to do? How are you going to help me? Because I think we could do something really special with a different strategy. Well, Barry, I'm sure you can't help me. I said, here's all we need to do. I need 3 minutes. Can you give me 3 minutes so I could explain this strategy for you? Barry, I am sure we can't do anything, but you're a nice enough guy. Go ahead and knock yourself out for the 3 minutes and do your thing. Go ahead. 3 minutes, you got it. Okay, I've got one question for you, and that one question is, do you have any debt? What do you think their answer is? Yes. First question, how about car loan? Average car loan in the United States as of last month, $32,000. So they tell me they got a $30,000 car loan, they bought a Chevy Impala. Great. How about credit cards? I got a Visa, I got a MasterCard, I got a Discover, combined $20,000. And then I did a little damage at Best Buy and I bought some back to school crap at Macy's. Before I continue with this, do I have your permission that this is a reasonable client? Yes. Okay. I am not trying to game the system. Okay. Yes? Reasonable? Yes? Yes? Good. They also have a car lease. It's $250 a month. Then they got another debt. Alimony, child support, student, whatever it is. Another debt. I'm trying to make it difficult because they've got some debts there too that I can't build into a strategy. So, Mr. Client, here's what we're looking at. You see, you owe $377. If we did a refinance, I'll build in the closing cost. I'll take the loan up to $380. But notice when you bought it, it was an 80 LTV. I could cash out refinance you to 75, and your current LTV, thanks to appreciation and amortization, is 62. You see that white space there? That white space is calculated to be $80,500. What if we took some of that $80,500, and what if we took that and paid off the car loan and increased the loan amount? Let's see what that would do. Instead of losing $247 a month, oh, wait a minute, I'm saving you money. Now, hold on a second. What if we did it with the Visa? How about if we clicked on that MasterCard? How about if we touched that Discover? What if we did it with the Best Buy? What if we did it with the Macy's? Now, it's smart enough to know you can't include the vehicle lease with the child support, but I could save you $1,049 a month. I'm not saying they do the loan, but would you agree with me that I have a little bit more of their interest? Yes or no? Yes. Okay, so now I've got their interest. They're not doing anything yet. Hey, is there a little bit more white space in there? Between that 75 and what their LTV would be? Is there a little more? Yes. So let's do a little more. So you've got $26,000 left. You need to do any work on your home? Need a new bathroom. Very good. Interesting you say that because I can show you in your market, this is local to every market, what everybody is doing. 37% of the people happen to be remodeling their bathroom. Barry, we fight every morning, my significant other and I, because we got one sink and it's a battle royale every morning. Well, let me tell you something. 74% of the people in this particular market are going to do one of these things. 79% of them are going to take out a loan. The average loan is going to be $20,000. Barry, I know that bathroom's $15,000. So what if we included that $15,000? We take it out of this $26,000 here. Now, if we add $15,000 to the loan, then I can't save you $1,049. I'm going to save you $968. Before we go any further, you'll be taking shorter-term debt and put it into a longer-term instrument. Is that a wise idea? It is if, because you told me you're comfortable making their payments, because you told me that you have no problem with your payments. You weren't thinking about refinancing. So that's right, Barry, I'm comfortable making it. So make the same exact payment you're making now, but let me do it on a new loan where I restructure your debts. I'll either build that $968 in, or if you want to voluntarily pay it, you can, but when you do, here is the result. Your new mortgage will have a term of 16 years and 3 months. That's 11 years and 2 months shorter than what you have, making the same payment. All I'm doing is restructuring your debt for you because I'm your advisor. I'm your debt manager. You see, that means I'm going to save you 11 years and 2 months or 134 payments. Let me ask you something. If you could save 134 times paying $3,000, how would that feel? Pretty good, yeah? Would that feel good to your customer? Hell yeah, but it gets better. How could this possibly get better? You know how it gets better? It gets better because 16 years and 3 months from now, if you do the strategy with me, what's your balance on your mortgage 16 years and 3 months from now with me? What is it, everybody? Zero. What would it be if you paid that 3.5% mortgage faithfully, which you now owe $377, 16 years, 3 months from now? You know what the balance would be? $214,000. Could you use an extra $214,000, Mr. Ms. Client? Could you? Could you? Could you? Now, question for you. Personal question. Have you definitely had the thought, maybe recently, maybe in the last couple of weeks, months, do I have enough money for retirement for me and my family? Have you thought of that as an individual? Yes or no? Do you think your client hasn't? Your client has thought about it as well and is worried about it. You're right, they don't have that money, but they're worried about it. Why are we afraid to touch our client in a way that can really change their life and help them? Why are we afraid? Why don't we help our customer in a way that an app can't, in a way that your competition can't, in a way that rate doesn't really matter? Because if I turn around and I say, I'm going to save you $213,000, team, there's 330 million people in the United States. How many of the families in the United States have $1 million saved for retirement? Anybody know? Any percent? How much? 1%? Good guess. Any other numbers? 10%. So 10% is 33 million. 1% is 3 million. It's less than that. It's not 3 million. It's not 1 million. It's not a $500,000. It's not $250,000. It's 133,800 people in the United States have $1 million saved for retirement. Would an extra $215,000 make a big difference in their life? You betcha. Because what most people have is $95,000 and that's it. In fact, 45% of the baby boomers have zip, zero, zilch, nada. You can change people's lives. Now, who remembers the rate that they had?
3.5.
Where am I taking them? What if we really did it? What if somebody really had 4.875 and I took them to 4% today? What if I only saved them 0.3%? Then it goes up to a savings of $300,000. What if it would be somebody where I'd be saving them a little bit more, 0.75%, like Black Knight's saying? $400,000. $400,000 and saving about 170, 180 payments of $3,000 a month. Is that life-changing? Yes. What do you think is going to happen? You think you're going to turn around and say, yeah, but can you do any better on the rate? You think that's going to happen? Here's a true story. Memorial Day weekend. I've got my landscaper, Gary Federico, wonderful guy, love him. He's the #1 landscaper in New Jersey, Colts Neck, New Jersey, in Monmouth County, New Jersey, #1. He makes a lot of money. It's a hot day. It's Memorial Day weekend. I'm like, yeah, want to come in? You want to get something to drink? Take a break for a little bit? He says, okay. Comes on in. I could see just in his face he's not happy. Something's wrong. Yeah, what's wrong, buddy? What's happening? He says, you know, I'm fighting. His wife, Michelle. I'm fighting with Michelle. You know, we make a lot of money, but we're behind. We're having a tough time here, just keeping our head above water. He says, even though we make like $600,000 a year, we cannot save a dime, and it is like just a struggle to make ends meet. We don't have any extra money, this and that. We're just paying our bills. I say, wow, what do you owe? And he starts listing it to me. I say, hold on a second. This is a God's honest truth story. I'm in my kitchen. I get my laptop, and I start typing them in right into our debt consolidation tool in MBS Highway. I start typing them in, and here's what he comes up with. He's paying $27,800 a month in debt. Yeah. Now, for any of you who saw that past scenario and said, yeah, but Barry, they're going to charge up their credit cards again. Do you really think, are you that naive to think that they're not going to charge it if they wanted to or they couldn't get credit? It's unlimited. It's like drugs being pushed on. Here's a credit card. Here's this and that, that. They can indebt themselves as much as they want, and they will not change their spending habits unless you coach them. I'm not saying they're going to change their spending habits, but wouldn't it be better if they had a fighting chance in life than if they have no chance at all and make it worse, like Gary here? And Gary's a smart, successful guy. So I'm like, Gary, like most people, you probably have equity in your home. He does. What if we took that and put it into your home? Here's the result. This is a God's honest truth deal. I can't even do the loan. I gave it to my daughter, Nicole, to do it. We saved them $26,111 a month. A month. I'm not even calling 2 people a day. This just fell into my lap because he was outside and I wanted to give him a drink. Okay? Here's what I said to Gary. Gary, you take $10,000 a month, and I want you to take that and blow it. Because you and Michelle are unhappy and you're sad, spend $10,000 a month and go have fun every month. But the other $16,000, Nicole's going to build it into your mortgage. And you know what the result is? You're going to pay off your mortgage in 2 years and 2 months. That's 19 years and 5 months before he would have had to do it. He's saving 233 payments, and then after that he's saving $26,000 a month. Do you know that Gary is a grown man? He's 51 years old. Do you know he cried? Do you know that his wife called me crying to thank me? Here's the best part. His son Michael drove to my house to thank me for changing his family's life. I didn't even do it alone. Thank you. Thank you. I didn't even do it alone. But this is the power you have. This is the power as a mortgage broker that you have every single day. You can change people's lives for the better. You can help change their lives. You can get their kids through college, pay for their retirement, give them more cash flow, give them happiness every single day. Just approach this differently. Now, when we started this discussion, I made you a promise. I said, you're going to make an extra $100,000 a year. So let me go through this with you. If you talk to 2 people a day for 5 days a week, how many people do you talk to? 10. You tell me, if you speak to 10, would you be able to get one of these? Maybe a lot more, yeah? Maybe like a guy like Josh Metal, who was on stage and said, in 30 days after Barry taught me this is his words, not mine, his quote, in 30 days after Barry taught me this, I wrote 37 loans in Salt Lake City, Utah market, average loan size $400,000, made himself an extra $157,000 in the next 30 days to him. $157,000 extra money in 30 days. But he said the best part about it was how he helped those families. He said it was better than the money. He said, look, I take the money. He said, but that feeling was a feeling that the money couldn't buy, of knowing how you change the looks on their faces, the feeling in their heart. And that's what this business is all about, and you know that. There's got to be more than money. If we're doing this for money, you can get by, but you lack fulfillment. Fulfillment in life comes from giving. And I know so many of you in here, I know you get that. I know you get that life is not about taking. Life's about giving. And that's where you get fulfillment. That's when you get a real change in your life, by helping and changing others. Team, here's the sad thing about this. I hope that you've liked a lot of these things we're talking about so far, and I've got a lot more to show you, but some of you aren't going to do this. Some of you will and some of you won't. And that's because your brain screws with you. It's your belief system. Stand up for a minute. We're going to do something. You guys have been sitting for a while, and those poor people standing. First of all, can I tell those of you standing how much I appreciate you, and I am honored that you are standing through this. God bless you and thank you. So, your belief system. Here's what I want you to do. Get close to each other. It's not that hard to do in this room. Get close to each other. Okay? Take your right hand, raise it nice and high. I want you to take that right hand. You're going to put it in the left front pocket of the person in front of you. No, don't do it. Don't do it. I'm just kidding. You guys thought, some of you guys say, man, Barry, you hooked me up. No. So here's what we're going to do. We're going to do this. You're going to put your hands out like you're driving your car, okay? And you're going to be driving your car like you're in your neighborhood. Close your eyes. Close your eyes. Close your eyes. Trust me, it's okay. Close your eyes. I want you to feel this. I want you to be driving your car. I want you to be in your neighborhood, someplace you've been so many times over. You're in your neighborhood driving your car, and I want you to come up to a stop sign. Not any stop sign, one that you know. You know it, you've seen it, you've come to it. Look at that stop sign. On the count of 3, I want everybody to tell me, what color is that stop sign? Everybody, 1, 2, 3. Red. We're in Vegas. Would you bet on it? Yeah, a little more timid, right? Well, guess what? We'd lose because our stop sign's not red. It's red and white. Okay, it's a technicality. But now, listen, I want you to feel good. I want you to feel like you got to win. So what I want you to do is I want you to be able to say, okay, I got this one right. So I'm going to ask you one more, but now you know how the game's played. Remember? It's not just red, it's red and white, okay? So here we go. Close your eyes. Hands out. Driving your car. You're in your neighborhood. Now, you come up to something you've seen before. It's a yield sign. Look at that yield sign. Listen carefully. Don't answer until I tell you. The question, listen to the question. What color or what colors is that yield sign? 1, 2, 3, tell me. Yellow and black. And now, because you know the game is played, you'd bet on this, wouldn't you? Except we'd lose. You know why we'd lose? Because the yield sign's red and white. All right, sit down. Now, sit down. Here's the point of that, folks. The point of that is that your brain screws with you. You think you know the answer. Okay? You think you know the answer. But the truth of it is that your brain can screw with you. Don't think that you got to go back to doing what you're doing. Don't discard the things we're talking about. Don't think you don't need to be an advisor. You do. You need to help people. You need to change their lives. Don't go back to work and get wrapped up in the busy crap and say, I don't got to make any changes. You have to. Stay ahead. See the future before it becomes obvious to everybody else. Now, one of the things we like to do is we like to help you with some tools like this open house kit, which has the cost of waiting on here. It has the appreciation levels, and it's got all the points of interest. That's built into MBS Highway. Remember, as an advisor, you want to show people what not that home is today, but what it's going to be worth in the future. In addition to that, we've got a lot of tools. I'm going to mention them to you quick, and then I've got an important story that I think you're going to like a lot. I just want to tell you this. This keeps the lights on, okay? So with us, you watch the daily update. If you like what I talked about today, you get that every morning with the music, like Matt said. That's a lot of fun. Real estate report card tells you what every market is doing. Your customers need it. You should never talk to a customer without looking at it. The debt consolidation tool, cost of waiting. People go crazy for this. Nobody does it like us. The best buy versus rent and military calculator in the world. The best loan comparison tool. We're the only ones who do it right and the only ones who make it easy. Everything works from your phone. And then the best tool that we have right now, that's the hottest thing, you need to be famous. Everybody needs to post on social media, right? How do you do it? I don't know what to say. I don't know what the content's going to be. I don't know how to do it. We turn your computer into a teleprompter. We give you scripts. All you got to do is read it. It looks like you're looking right into the camera. It is insane. People are getting 10,000 views a week, 5,000 views. Honest to goodness, I just did this week. I was at Loan Depot. I did one for Loan Depot. They're nice people there. A gal said, listen to me. Don't make faces, okay? So here's the deal. The girl did it right there. We did a workshop. She did it right there. Swear to you, somebody applied online just from this. It took her 60 seconds to do. You need to be famous. When I was doing stuff for CNBC, it helped me, but you don't need to do that today. You could be famous. Before you walk into a real estate office, people should know who you are. They should know how smart you are. Before a customer sees you, you should be able to show them stuff that shows that you are brilliant, that you know your stuff, that you're truly an advisor. This will help you do that, okay? And then there's a screen record tool. We surveyed our subscribers. They make on average an extra $35,000 a quarter. That's not too shabby. AIME, Anthony Casa, who's phenomenal. What a great leader. Look at what he's done, okay? And his team. Give him a hand. Mark, great leader. What a great team they have here. So we're honored that they brought us on board. And they said, hey, listen, we want to do something special for our subscribers. So this is literally half the cost of what it is. Dan will be outside after I finish talking. I have one more important thing to go over with you. But if you want to go see Dan, you want to do this today at AIME, it's even cheaper than the normal AIME pricing at the event. Just ask somebody who has it if it's worth it. That's all you got to do. Don't take it from me. Okay. Listen, one of the things I get to do is I get to do something fun. I get to sing in a band. And in spite of me, our band is really, really good. Okay, but here's the thing. We get to play some big events. And we play the party before the Super Bowl. It's the day before the Super Bowl. We've done it the last 3 years. We're already contracted to play the one in Miami. Wheels Up throws the party Saturday before the Sunday game. And Wheels Up is just an amazing company. And at these parties, many of your Facebook friends of mine, you know all the celebs that come up. I had Russell Wilson come up and sing Living on a Prayer with me. I had Evander Holyfield come up on stage with me. It's an amazing, amazing, amazing party. But the absolute best thing about this whole deal is the day before the Super Bowl. Now, Kenny Dichter is the CEO, and he's become a good friend of mine. Now, Kenny has got the world's greatest Rolodex. Who doesn't want to know the CEO of a private aviation company, Wheels Up? I mean, really. So all the players, everybody, all the big shots, they all love Kenny because Kenny's got the goods. So what happens is the day before, Kenny calls me up in the morning and he says, hey, Barry, he says, I got something special for you. I said, what have you got? He says, you want to have breakfast with Bill Belichick? I said, shit, man, yeah, absolutely. And I've done it the past 3 years. And I've got to tell you, first of all, what an amazing man he is. He's a good person. He's an amazing man. And on top of that, I can't imagine what it must have been like to be a player, to play for him, to learn from him. I wanted to sit at his feet and just learn. And what I'm going to do is I'm going to share with you some of the lessons I learned over the past 3 years. And I'm going to try and make this quick, but I want to show you how life-changing this could be. So first of all, Bill Belichick, he said at the table, anybody have any questions? And somebody said, hey, Bill, how do you do it? You're such a great halftime coach. You make great halftime adjustments. I could see Bill did not like this. He says, halftime? He says, you wait till halftime, the game's over. He says, first of all, you can only prepare for 3 quarters because the fourth quarter is dictated by situation. But the first 3 quarters, he said, that's where all you can prepare for. So if you wait till halftime, it's over. He said, you have to listen to what the opponent is trying to do, and then adjust. He says they're going to try and have some deception there. But think about what are they trying to exploit of yours, or what are they trying to establish, and then adjust. What does this mean in mortgage sense? Listen to your customer. What are they trying to do? And then make your adjustment. Is it college education? Is it cash flow? Listen, I'll tell you when my mortgage career changed. I'm very, very proud. As a mortgage broker, I did, on average, over $100 million a year for all 21 years of my career. Back when I was doing it too, we had lower loan amounts. It's harder for you because of things that you have to go through today than it was for me when I was doing loans. So I have so much respect for you, but those are still some pretty good numbers. It was just me and one assistant. And my career changed when I started to do a couple of things. One of them was I stopped doing one mortgage at a time. I did today's mortgage in conjunction with the next mortgage that you're going to take, and everything changed for me. In other words, today's mortgage, if you just do that, well, that's just today's events. But what about all the economic stuff we talked about? Knowing what rates are going to do allowed me to plan when that next mortgage would be. But it's not just economic events, life events. Is anybody's life here the same as it was 3 years ago? Your customer's the same thing. Are you expecting a child? Are is someone terminally ill? Do you expect to be an empty nester? Are you in a situation where your income's going up, that your income might be going down? Are you going to be moving? What are the life events that you could see, because there's enough of them we don't see? And plan that in so you could do 2 loans at a time and time them together. Unless you ask the questions, you can't do 2 loans at a time. Unless you have the knowledge, you can't do 2 loans at a time. And when you do, I promise you your career will change as well for the better. Not to say that it's not great now, but it'll be even the next level up. So, he says the film doesn't lie. What does he mean? He means that when a player's on the sidelines after the play, what are they all looking at, everybody? The film, the previous play. Why? They were just in it. Whoa, they have their eyes closed? Tom Brady have his eyes closed? Why is he looking at the iPad to see what happened? Because you can't see it when you're in it. This next thing I did to change my career, I started recording my phone calls. I started recording my phone calls, and you need to too. You know why? You will not believe the crap that comes out of your mouth. And not only that, they'll ask you a question, you won't even answer it. I started off with the bus. You could see we don't listen. We really have to learn it as a skill. The only way and the fastest way to grow, record what you did just like a professional athlete, and then look at it. Anybody go for golf lessons? What's the first thing they do? They film it, don't they? Okay? Because you can't fix what you don't know. Just think about that. Knowing allows you to fix. Exploit your opponent's weakness or ego. And I love Belichick. He's so great. He talks about Brady and Favre. He says, yep, Tom Brady, Brett Favre, both great, both gifted, both Hall of Fame, but Brady's so much better. He says, why? He says, because Brett Favre, all ego. He says he's going to force the pass into double coverage. Now, Favre believes he can do it because he's got amazing, great ability. But his decision-making is not as good as Brady because he let his ego get in the way. Brady, he wants to do one thing. He wants to win. He'll take what the defense gives him. If the defense gives you the run, he hands the ball off. If it's a short pass, he dumps it off. He does not have to be the star, but by winning, he becomes the star. Winning, not ego. What does that mean to us? Take what the defense is giving you. What is the defense giving you right now? What is it giving you? It's giving you low rates. It's giving you refinances. It's giving you appreciation, cash out. Take that. Hot housing market. Look, hey, everybody, listen, I mean this from the heart. If you hit your knees and you pray, okay, I do every day, and when you do, you said, I really want to pray for low rates. Well, poof, you got it, didn't you? If you said, hey, I want to pray for a good housing market, well, you got that one too. And then you said, I want to pray, maybe some of you don't think about this, that people have equity, so it's easier for them to move up and it's easier for me to manage their debts. Poof, you got that too. You've got everything you ever wanted right now. And damn it, why are you not working your freaking ass off? Because you think it's always like this? Do you really think it's always like this? Do you not remember 10 months ago? Oh, maybe I should work in the mall. You know, maybe I should do it, right? I don't know, trust this business. Sucks. This is not 10 years, 10 months ago. Do you want to be that person that says, I wish it was 2019 again. You've got it. It's in your hands. Now look, I'm all about life balance. I am all about life balance, but in order to have a great life, you sometimes have to be out of balance. Now is the time. Now is not the time to go and play golf. Now is not the time to knock off early. Now is the time you work your frickin' ass off, you beat your competition, and you change your family's life because you have that in your hands today. You could do that right now. And goodness gracious, if you have everything in your hands and you're not taking advantage of it, you're going to kick yourself later. Now is the time for you to do it. This is your time. No better time for you to protect yourself, protect your family, and build a great life and a great future for yourself. Don't beat yourself. That's what Belichick says. Don't beat yourself. Repeat excellence. I want to tell you something. It's very easy to be hungry when you're starved. Very easy. But right now, when you're well-fed, the key is to stay hungry even when you're well-fed. That's what winners do. Why have the Patriots done that every year? They stay hungry even when they're well-fed. How do you do it? I'm going to tell you the secret right now. You find out your why. You find out what motivates you. I'm going to ask you an honest question. Honest question. No bullshit. When you walk out the door, do you just walk out the door, get in your car? Or do you think about the reason you're doing this? Now, the very vast majority of us, it's the former. Just get in our car, just go. I want you to change that. I want you to change that. Here's the things I want you to think about. I want you to think what motivates you. Is it money? Please do not ever be ashamed of money. Take it from somebody who grew up in poverty. Take it from somebody like me who grew up so poor that I know what it's like to be poor. Take it from somebody like me who knows that while money doesn't buy everything, it will make your life a lot better, and it'll also allow you to do a lot of good with that money for others. Don't be embarrassed about wanting to make money. That's a noble cause. What about competition? Do you like competition? Does it suck for you to lose? Tap into that. It sucks to lose. Don't just compete against others. You know who your best competition is? You. What were your numbers last month, last year? Are you beating them? Are you exceeding them? Are you going over and above? Because every time you're near a goal, you reach a goal, do you say, oh, it's New Year's Eve? Or do you say, you know what, I'm raising it higher? Winners take it up a notch. That's you. You're a winner. You take it up every time you hit that goal. Is it your significant other? Do you think about that before you walk out the door? Do you think about, I'm going out there because I'm going to make a better life for this person? I want to hear that person say, I'm proud of you. Wow, that feels pretty good. Maybe that makes you stay and make a couple extra calls. Maybe that gives you a little more reason to study and learn the market so when you talk to people, you not only do good in their lives and help them, but you make more money and get rewarded. How about your parents? Shit, man, my parents made so many sacrifices for me that I could never repay them. They came here as immigrants. I'm first generation born here. I'll be damned if I dishonor that. I want to make sure that all the chances and the sacrifices my parents make, like your parents made for you, that I want to honor for mine. How about your children? Man, let me tell you something. Anybody here not want to walk through fire for their kids, right? Would you? Hell yeah. You think about that before you walk out the door, that that's why you're doing this? Nothing will stop you. You're never going to lose a deal. Nothing stops you there. When I first got into the mortgage business, I was a young man, and young men make foolish decisions. That was me. I made a foolish decision. I got into the mortgage business, and when I did, my twins, Dan and Nicole, Dan who was here, were 2 months old. And I decided to change careers. When I got out there, nobody wanted to do business with me. Some wet behind the ears kid, do business with you? You don't even know what you're talking about, right? Realtors wouldn't talk to me. You think I'm going to say, that's okay, I give up? No frickin' way. You think I'm going to let those children down? Because I understood why I walked out the door in the morning. You know what I did? I went out at night and I knocked on people's doors and saw if they wanted to refinance. Let me tell you something. Some people threw me out. Some people even called the cops. But my third week in the business, I wrote 16 loans. 16 loans, swear to God, because I knew the reason I was doing it. Nothing was going to stop me. I was never going to let those kids down. And I talked to everybody I could. The guy in the pizzeria, my hair cutter, my accountant. My accountant one year gave me $33 million. I went places people didn't look. My hair cutter, you sit in a chair. What's the first thing the hair cutter says? So what's new? And if new was getting a home, I got a guy for you. My hair cutter was good for 2 transactions a month for me. There are opportunities everywhere. In New Jersey, I'm going to date myself here. Born and raised in New York City, grew up in New Jersey. You go down the Jersey Turnpike, the Garden State Parkway, you'd have to pay tolls before you had the little easy pass things. You know what I'm saying? So I'm talking way back. And I had exact change that you could throw in a basket, but I didn't go there. I went where, even if I had the quarter, I went where there was a toll collector. Because I could give that guy my card, and I could say, as I drove by, I only had 3 seconds, hey, buddy, let me know if I could help save you some money. Give my card in the quarter. Every single time. By the way, caught so much shit for it. My friends, I would be going to like a hockey game or something. Barry, again? You know, and everybody gave me shit until a guy by the name of Steve Horton from the Triborough Bridge and Tunnel Authority did his refinance with me, but that's not it. I wound up doing 17 of his coworkers. Team, every other mortgage professional in New Jersey drove those same roads I did, but they didn't look for the opportunity. It's everywhere. Open your eyes to it. Understand your why. My book is called Money in the Streets, because when my parents, who were immigrants, before they came to America, like so many immigrants, heard, America's such a rich country, there's money in the streets, all you got to do is pick it up. And we were so poor, as I was growing up, my mom would tell me this as if it was like a joke, and it was sad. You know, people thought there was money in the streets. And as I started to see these opportunities and discover them, I sat down with my mom one day. And I said, Mom, you know what? They're right. There is money in the streets. All you got to do is pick it up. And I want you guys to pick it up everywhere. God bless you. Thank you so much.